Hello and welcome. I'm joined today by Julian Golding from Blake Morgan and Andrew Locke and Craig Hewitt Dutton from Locke Dutton Corporate Finance LLP. The subject today is what we know as entrepreneurs relief, which is now called business asset disposal relief, and speculation for some time that actually the current circumstance, that £1 million allowance at the 10% rate, is likely to change. We want to think about that in light of what it means for business owners, when that change might happen, and what could that mean for the marketplace. Craig, can I first of all turn to you for your opinion, please?
Yeah, so currently as it stands, entrepreneurs relief or the business asset disposal relief has it's been changed to sits at £1 million. The first £1 million people are able to pay capital gains at 10%. And then anything above that, they pay 20%. The £1 million a lifetime allowance. And as we've seen in previous years, that lifetime allowance was at one point as high as £10 million. So the noise around the government at the moment is that something is going to change. There's a chance that they may get rid of entrepreneurs relief, or they may increase the tax rate that they've been using. So it may go from the 20% may go up to 40, and some people are even talking about 45%. So I suppose the question we're kind of talking amongst ourselves at the moment is this the time to do something with the inevitable changes coming? And what we've heard is people are talking about maybe November later this year, or maybe announcements to say that it's going to come in 2022.
And so, Julian, with your legal hat on, we have to caveat this by saying this is speculation on our part, but the rumour does seem to be rife. What is your view on what action a business leader should be taking at this time?
The relief has already come down in one big swipe from 10 million to 1 million. And let's face it, it's hardly likely to go back to 10 million. It seems to me that there is every reason to take advantage of the relief if you're thinking of selling your company. And this would be a good time to progress it and take the benefit of the relief as it stands at the moment.
And so, Andrew, let me turn to you there. So Julian is talking about doing that deal. What is that deal? Talk us through the notion of a partial and exit deal, and tell us what it takes for a business to be prepared so that that transaction can be realised, it can be delivered on, and the kind of structures around that, please.
Thanks, Martin. Julian and Craig raise obvious points. Tax. We've had a COVID-19 12 months. Tax has got to be raised to start to pay for that. George Osborne used in the 2010, I think it was, he telegraphed all the changes. I think that's what Craig and Julian are suggesting. In other words, in the budget on the 3rd of March, we expect to hear changes. Changes never normally go down, they would go up. So we expect to see changes going up. So as to what you can do, trade sales are what most people have heard of, and that's what they think is what they'll need to do to sell their business. Selling a business needs to be prepared well in advance. So it takes 6 to 8 months to successfully sell a business. If we read the tea leaves enough, carefully enough, then they're suggesting November is our the first change on corporation on CGT tax changes. 6 to 8 months fall into that window. So starting now is a preparation for that. And there are so many people that want to sell their businesses, but there's only a few buyers, and they're very discerning buyers. So preparation to make sure that you're in the best position to sell your business is important, and it takes 2 or 3 months to prepare before you go and try and find somebody to buy your business. Variations on that are, as you mentioned, partial sales, where you sell some of your shares. A lot of our clients are absolutely unaware that you have the capacity to sell some of your shares, stay in the business for another 2, 3, 4 years, and then have a second opportunity to sell your shares. They're unaware of that. That's very, very popular. We have to say, and with Elephant's Child, we've experienced 2 or 3 opportunities where we've had shareholders sell some of the shares successfully, take benefits of CGT rates, and then still hold some shares and carry on trading alongside maybe private equity houses or other shareholders. And I think that is an opportunity that is really right in front of us. Financial buyers who enable partial sales to happen are more fleet of foot than a trade buyer, and therefore more likely to happen within the time frame that we're speculating may exist.
Thank you, Andrew. Yeah, I was just thinking as you were talking there, and I'd like to get your counsel on this. What we have seen November and December and in January is record levels of activity. Just this week we've had an exit complete today. We've gone exclusive on an offer earlier on this week. We are seeing businesses come to market that want to exit. They are full exits, they are partial exits. Yesterday evening, we received an offer for a partial investment in another one of our clients. So we are seeing a really high level of activity in this space. We know there are buyers out there. We know there is money out there. So are you seeing those levels of activity? And if that is the case, and given this speculation around this change in what we used to call entrepreneurs relief, isn't now the right time to act? Craig, let me come to you on that.
Yes, I think you're correct. I think we have seen a pickup in activity. I think a number of people have picked up on this opportunity of a change in capital gains tax. And I think if you are somebody sitting at home with a business and you may be thinking about selling, your plan was to sell within the next 2 or 3 years, you may be bringing that forward to take advantage. We just spoke with a client today who said exactly that. He said he's in his early 50s. His plan was always maybe to retire at 57. He's probably going to bring that forward a couple of years because he doesn't want to pay 45% tax. Now, we don't know it's going to go to 45% tax, but if he won't be in a position to make that decision if it does become 45% tax. So he's going to put his company in a position where he can go to market, see what the options are, see how much the company is worth, and see if he can find a sensible buyer.
And Julian, is the activity there? Is now the time to act?
Businesses need to be prepared. It is something that I have believed in for a long time. And the reality is that businesses that do prepare are much more likely to get the money they're seeking in the timescale they're seeking and bring the matter to a successful conclusion. The market is there, but buyers are particular. They can be particular. So they will go for the people who they can buy in a reasonable manner rather than struggle with those who are unprepared and unable to answer their questions, which they will inevitably raise before they buy the company.
And so to you, Andrew, for final closing comments, business asset disposal relief, what action are you promoting?
First of all, really, we shouldn't let the tax tail wag the dog. In other words, if you own shares in your business and you've got a cracking business and you think you'd like to generate some capital gain because you can sell it, then you should do that. And frankly, those decisions are made because of your own circumstances. Rarely do people make decisions of such magnitude solely because of tax. But if you are mindful to sell your business or part of your business, because as we said, that's an option, then why not take opportunities for using the tax schemes that are out there for us to benefit? We've had a flurry of activity November through to now, where we have 4 or 5 of our clients who are in exclusivities now to try and conclude. That would be trade sales, partial sales with equity houses, all manner of things, just because it's what the shareholders, directors want to do. And it happens to be that tax is advantageous. So there's sort of, got to be both things in line. But if you're going to do something, why not benefit from tax? Yeah.
Great. Thanks, Andrew. Thank you, Julian. Thank you, Craig. So some sage and pragmatic counsel there. Business asset disposal relief, much speculation that it's a changing landscape at the very least. And I think our promotion is it's at least a time for business leaders to start thinking and taking advice about the options and the art of the possible out there. Thank you again, chaps.